Welcome to The Explainer. So glad you're here. If you've ever looked at a mountain town market and thought, why on earth do housing prices fluctuate so wildly up here? Well, you've come to the right place. Today, we're totally decoding the raw numbers behind the Big Bear real estate market. We're cutting through the noise and looking straight at the hard facts. Now, to do that right, we need a solid source of truth, right? So just to establish trust right out of the gate, all the insights we're digging into today come directly from official MLS data, proudly provided by Keller Williams Big Bear and Lake Arrowhead. So we aren't just relying on broad national headlines here. We're diving into the actual localized transactions happening right on the mountain. Which brings us to a really fascinating question. What actually happens when you pop the hood on mountain real estate? I mean, we hear about booms, we hear about slowdowns, but mountain markets are just incredibly unique beasts. By looking closely at this data, we're going to get a crystal clear view of exactly how, and more importantly, why, prices fluctuate so much from month to month and neighborhood to neighborhood. Okay, let's dive into this. Here is our roadmap for today. 1. The Big Bear market overview. 2. Comparing 2025 to 2026. 3. Neighborhood highs and lows. And 4. Today's active market. Starting right off with Section 1, the Big Bear market overview. So before we can really grasp those hyper-local shifts that cause prices to jump all over the place, we first have to look at the entire mountain to understand our aggregate baseline. Now, I know looking at a screen full of spreadsheet rows can feel a bit like reading the Matrix at first, but don't sweat it, we're going to find the fascinating story hidden right inside these columns. What we have here is the raw market analysis summary for the first half of 2026. You're basically looking at the heartbeat of the market. Hundreds of listings, average sale prices sitting right around that mid-$500,000 mark, and a median days on market hovering around 79 days. But as we know, aggregates can be super deceiving, and that right there is the secret to understanding price fluctuations. This perfectly highlights why mountain real estate is so notoriously hard to pin down in a single headline. The market is just wildly diverse. I mean, in our dataset alone, closed prices range from a $5,000 vacant lot all the way up to an active listing at nearly $9 million. Big Bear simply isn't a monolith. When you have a spectrum of property types that wide, literally spanning from tiny rustic little cabins to sprawling lakeside luxury estates, the average price is absolutely going to fluctuate wildly just based on what happened to sell that particular month. Moving right along to Section 2, comparing 2025 to 2026. Let's actually see how the first half of last year stacked up against the first half of this year and see what the numbers can tell us about market momentum. And this brilliantly illustrates the macro shift we're seeing. When we group all the areas together, the overall market saw a slight dip in the average close price year over year. So in the first 6 months of 2025, the average close price was $579,728. But in that exact same window for 2026, it softened just a bit to $557,751. And we can actually see this validated right here in the source document. Down at the bottom under Area All, representing 351 specific residential closings in the first half of 2025, bam, there is that $579,728 average. Now, a total novice might look at that slight drop into 2026 and completely panic, right? They'd assume home values are just plunging. But hey, we know better. A drop in the average might simply mean that fewer multi-million-dollar lakefronts happen to sell this year compared to last year, which of course pulls the whole mountain's average down. But here is the real metric that proves the market is actually incredibly stable. Despite that dip in the overarching average prices, the sale-to-list price percentage remained consistently rock solid at around 97% for both years. To be exact, it was 97.3% in 2025 and 97.1% in 2026. If you're a buyer or a seller, this is absolute gold. It tells us that sellers who price their homes correctly are still getting almost exactly what they're asking for. So the market isn't crashing by any stretch. It's literally just the types of homes changing hands that are fluctuating. All right, Section 3, neighborhood highs and lows. So now we're zooming in from that macro 10,000-foot view straight down into the micro markets. Geography is absolutely the biggest driver of price fluctuation on the mountain, and I actually want to test your mountain knowledge for a second here. Based on what you know about Big Bear, which neighborhood do you think consistently boasts the highest average prices? Just take a second and guess. Are we talking near the ski slopes, or maybe something hidden deep in the national forest? Well, let's contrast two drastically different micro markets to reveal the answer. Fawnskin versus Sugarloaf. Fawnskin is totally known for its luxury, high-end, often spectacular lakeview properties over on the quieter North Shore. Sugarloaf, on the flip side, sits a bit further back from the lake and offers much more entry-level affordability. And guys, this is exactly why localized data matters so much more than some generic mountain-wide average. Get a load of this. For the first half of 2025, Fawnskin commanded a massive average closed price of $948,889. We're talking nearly $1 million on average, primarily driven by super low inventory and highly desirable, totally unique luxury homes. Now, what's really interesting about this stark contrast is the accessibility weighting on the totally opposite side of the mountain. During that exact same time frame in 2025, Sugarloaf's average closed price was just $327,121. Sugarloaf provides a much, much more accessible entry point for first-time mountain buyers or even investors. So, if someone tries to tell you, oh, Big Bear prices are around $570,000, you now know for a fact that's just a statistical illusion. It's actually a tale of two very different mountains, depending entirely on which zip code you happen to be parked in. And as always, we anchor our analysis right back to the raw data. Right here on the 2025 sold statistics, you can actually see Fawnskin with its 9 closed units averaging that huge $948,889 figure, while just down the page, Sugarloaf's 54 closed units sit at that $327,121 average. This volume difference right here, this is a huge piece of the fluctuation puzzle. I mean, think about it. When Sugarloaf has 54 sales and Fawnskin only has 9, the overall mountain average is naturally going to get pulled way down towards Sugarloaf's pricing tier. Which brings us to our final stop, Section 4, today's active market. We've spent a lot of time looking at history, what has already sold, but what about the properties sitting on the market right now, just waiting for a buyer? Well, here is a snapshot of the current active listings dashboard. As of right now, there are 583 active properties, and the average list price currently sits at $696,420. Now, you might notice how that active average list price is quite a bit higher than our closed averages from a few minutes ago. But honestly, that's totally common. Sellers usually aim high out of the gate. But that 97% sale to list ratio we learned about earlier pretty much tells us where those prices are actually going to settle once they reach closing. So the really crucial point here is this isolated massive number, 1,070. That represents the maximum days on market currently sitting in the active inventory. Let that sink in for a second. That means a property has been listed for nearly 3 years. So why does this actually matter for us? Well, high days on market doesn't always mean you're looking at a bad house. Look, in a typical primary suburban market, sure, a house sitting for a year implies something is deeply, fundamentally wrong. But up here in a mountain resort town, it often just means a highly specialized, luxury, or maybe uniquely situated property is simply waiting for its perfect, specific buyer. Mountain real estate requires immense patience. It's usually a discretionary purchase, a second home for a lot of folks, and that completely throws the normal rules of real estate timing right out the window. Wow, we've really seen it all today. From $160,000 tiny active listings to an $8.9 million active estate. The Big Bay market is just as diverse as the landscape itself. You now understand exactly why those prices fluctuate so much. It's the constant shifting mix of inventory, the vast differences between micro neighborhoods like Fawnskin and Sugarloaf, and of course that unique patience required for specialized mountain properties. So I'll leave you with this one final thought. Whether you are out there hunting for a rustic little weekend cabin or a sprawling lakefront legacy estate, how will you use this data to navigate your own mountain purchase? Thank you so much for joining me on this explainer. Until next time, stay curious and keep learning.